Good afternoon, everyone. My name is Shanti Leone. I am VP of Institutional Partnerships at Bitwise Asset Management. This session will focus on the proliferation of digital asset treasuries across capital markets this year. And joining us is an expert on the space, or maybe the expert, Cosmo Jiang, General Partner and Portfolio Manager at Pantera Capital. Welcome, Cosmo. Thrilled to have you here.
Hi, thank you. Nice to see everyone. Nice to talk to you, Shanti.
Great. So, Cosmo, a lot happened this year with digital asset treasuries. If you could give us a quick overview of the DAT landscape today, and then the role that Pantera is playing.
Yeah, maybe it's helpful if I rewind a little bit. This space has grown very quickly, and some might say has deflated very quickly too. If I rewind back to even a little bit earlier this year, we've done a lot of work into MicroStrategy to understand why it had traded at premium for so long. It just seemed like anathema to everything I understood as a fundamental value investor. But as we really dug in and re-underwrote it, we realized that, wow, these can be very sustainable business models if executed correctly. And by the way, maybe it actually makes sense to do it with an asset outside of Bitcoin. And so when we were approached by a really exciting management team in March that they wanted to start the first US, we were calling them MicroStrategy copycats at the time, MicroStrategy copycat here in the US, focused on Solana, we got very excited and ended up investing, anchoring, bringing to life what was the first MicroStrategy copycat here in the US. Next week we were approached by Tether and SoftBank about their Bitcoin DAT, which ended up becoming 21 partners, which we also ended up anchoring and being the largest investor in. At the time, I thought those would be the only two MicroStrategy copycats that ever existed. And lo and behold, everyone saw the strong performance of those two stocks, and it became very, very crowded space very quickly. So now there are over 80 DATs that are live. There's been over $20 billion of capital raised in aggregate, excluding MicroStrategy. There are over $30 billion of market cap, and so it's become a really big space. At Pantera, we were fortunate, humbled to be the team that really helped jumpstart this whole trend. Sometimes I feel that with some bated breath, because obviously it's caused some losses for some people as well. But we feel pretty excited about some of these becoming really big outcomes for some people.
Great. Yeah, I saw an amazing tweet by your CEO and founder, Dan Moorhead, supporting the Solana ecosystem and saying we're skating where the puck's going. So it was great to see the buy-in from your whole firm. In terms of the best capital market mechanisms or investment strategies that a DAT can use to generate accretive yield, how do you guys think about that? How do you advise the DATs that you work with?
Yeah, if we go back to what a DAT actually is, the whole goal of a public company is to maximize shareholder value. A DAT chooses to maximize shareholder value by maximizing accumulation of tokens per share. So in the case of a Solana DAT, such as our Solana DAT, a Solana company, HSDT, we're very focused on how do we maximize the number of tokens per share, and in that case, Solana per share. There are a few ways to do that. In a lot of ways, these businesses are actually, these business models have always existed. They just used to be called financial services companies. Banks, insurance companies, they are also balance sheet-based businesses whose goal is to maximize book value per share. They happen to denominate in dollars, and we happen to denominate in SOL. So we're like a Solana-based financial services company that's trying to maximize book value per share. How you do that? It's sort of the tried and true methods that have been true since the dawn of capitalism, which is there's a combination of financial engineering they can do on the liability side of the balance sheet, and then there's a combination of yield generation that you can do on the asset side of the balance sheet. And so we're on the liability side or on the financial engineering side, you can go raise equity in an accretive way. If you trade above book value, you can go raise debt. You can go sell warrants in order to monetize your volatility, or sell preferreds to monetize your future value creation. And so there are all these ways that you can generate yield as defined as increasing accretive to book value per share or Solana per share. On the asset side of the balance sheet, on the organic side, you can look at, especially with something like Solana, the simplest thing is to just go stake your Solana. So we are one of the largest stakers of Solana companies, one of the largest stakers of Solana. And we try to support the validator ecosystem by diversifying across a set of validators, and really in search of a balance of maximizing yield while also keeping in mind what the best outcomes are for Solana as an ecosystem. Other ways are deploying into DeFi. There's going to be some exciting announcements about that over this course of this conference that we have, as well as potentially interacting with CeFi and doing lending of Solana. So all those are really interesting things. I'd say the most important thing beyond the balance sheet is probably the number one job of a DAT, if our goal is maximizing shareholder value by maximizing tokens per share, is also maximizing the value of the token. Right? If Solana doesn't have value, or if we don't believe Solana has value, then this whole thing doesn't make sense. And so we strongly believe that Solana is the most exciting L1 with the highest upside, highest risk-adjusted upside. And so we feel like Solana company's job is to be the IR function effectively for Solana, to tell mainstream investors, to deliver that message to a whole new broad set of people, which is what we're out here doing.
You guys have been an amazing partner to the Solana ecosystem. You touched on the DATs using staking as a mechanism to generate yield. How do you see the competitive landscape between ETPs now available in the US versus a DAT that incorporates staking?
Definitely. I'm often asked by allocators in my discussion with the allocators, like, why do I buy a DAT when I can go buy a passive ETF such as the Bitwise Sol ETF, which is plug one of the highest performing Solana ETF by volume. It's pretty clear to me that ETFs are passive and DATs are active. Many people can choose active management to get a different type of exposure to the underlying. It's not going to be one-to-one correlated to the underlying like a passive ETF is. So if you buy a passive ETF, you know what you're going to get. You get 1 Solana per share, or the equivalent of 1 Solana per dollar you put in, and that doesn't change over time, excluding some minor fees that you pay every year. With an active manager, such as a DAT, what you get is a management team that's really focused on all the different ways, all the levers you can pull, both on the capital market side and on the asset yield generation side, in order to maximize Solana per share. And so you can do more than just staking. And that's not to say though that just like not every active manager beats the passive ETF, not every DAT is going to beat the ETF. And that would be par for the course for capitalism. And what I would fully expect is most DATs do not outperform ETFs, just like many active managers do not outperform the index. But high-performing DATs, high-performing active managers absolutely have a right to win and can win.
Great. You touched on maybe not every DAT making it to the finish line outside maybe the core Solana DATs. So when you think about the top operational or financial red flags, what should an institution or an investor look out for?
There are a few things that I'd lay out. First is certainly are management incentives in the right place, and so understanding what the management team is really focused on. What are their incentives? What are their KPIs? As Pantera, as the asset manager for Solana company, we're very focused on maximizing the amount of Solana that the company owns. But we're also the largest shareholder in Solana company, so we're also very focused on maximizing value per share as a shareholder. And so that incentive alignment we think is really important. Second thing that you really should look for is the management team and their service providers' experience. A DAT is, in many ways, I come from the traditional finance world. I operated in private equity and long-short equity for most of my career. And so many of these capital markets, financial engineering tools are very simple or nature to me. And I'd say that's candidly not true for many crypto natives. These tools have been tried and proven in the traditional finance world, and so knowing how to approach bankers, how to approach the sell side, how to approach potential investors, delivering them the message and the product they need is very important, and not everyone really knows that message. So looking at their experience. On the asset management side, it's really important to find a management team that's really focused on risk-adjusted return. There are many ways to maximize your return. So these DATs, many of them will stretch along the risk curve and become effectively actively managed hedge funds. That's not to say that's necessarily a right or wrong thing, but you as an investor have to choose whether or not that's actually what you want. Whether you want to underwrite that this management team, by doing very, very black box or sophisticated strategies, whether that's something that you approve of and you're willing to trust them with. And so there's varying things. I'd say the last thing is just their and maybe the most important thing is their ability to get in front of mainstream audiences. The whole point of a DAT is, and as much as I love everyone that I work with and I love everyone in this crowd, the whole point of a DAT is not to market to crypto natives, right? The whole point of a DAT is to deliver the story to a new set of investors, in particular the large pool of capital that exists in the equity markets from traditional retail investors, and so and traditional retail investors and traditional long-only institutions, and so. Seeing that there's a strong marketing game trying to tackle, marketing and distribution game trying to tackle those new investors and not necessarily focused on crypto natives is pretty important.
So what are you seeing from institutions when you have conversations? Who's coming into this space? Who's investing?
So I think it starts with, if you look at MicroStrategy's top 10 holders, it includes some of the largest funds in the world. Right? Capital Group is the largest mutual fund in the U.S. If anyone has a 401k, you probably don't know, but you're actually invested in a capital fund, most likely. They're a top 10 holder of MicroStrategy. If you look at, Norges, the Norwegian Sovereign Wealth Fund is a top 10 holder of MicroStrategy. And so those are the types of investors that are circling these opportunities. These DATs do need to get to a scale where it becomes relevant for large long-onlys and for large institutions. And so, that's a few billion market cap range. But if you can generate the momentum to get there and start building, seeding the ground and having the conversations with them, which we're having with many long-onlys and other institutions to start educating them, eventually when you get to that scale, they'll be there. And then when they allocate, they actually do allocate in size.
Makes sense. Okay, so on a look-forward basis, how are you thinking about DATs in the broader capital markets in 5 years, 10 years?
Yeah. I love that question because almost always my conversations with people are like, what's happening to DATs this week? But I'd say, look, we just went through a phase of what I would call like the genesis phase of DATs. We just saw the creation of a whole new industry. You have to realize the creation of something only happens once. And so, back in April, there was all this white space. I had a whiteboard that wrote down all the DATs that I thought made sense, like 1 to 2 scaled ones for each of the large cap assets, a few other assets that I thought were interesting. Clearly, a lot of entrepreneurs saw that same opportunity, and more than 1 or 2 tackled all those opportunities, as you would expect with any set of startups. Now we're at a phase where, all that white space, if I go back to that whiteboard, I've checked off everything. They all exist. Not to say that there won't be more, but the obvious white space is gone. And now the moats, the barriers to entry are much higher. It's going to be much harder to have a real reason to launch a de novo DAT. And so now that we're past this genesis phase, we're in what I would call the consolidation and execution phase, which is pretty much most of history. And the public markets are really amazing. That's where most value creation happens, is in the public equity markets. And so we're in the part where these DATs will now need to figure out whether they are going to compete and become one of the leaders. If they are the leaders, they'll be in a position to potentially consolidate the space, either through acquisitions or other partnerships. So I think we're going to see a lot of consolidation. I think we're going to see the separation of winners and losers. All that is healthy because eventually the capital will consolidate into 1 or 2 leaders that can really drive the importantly Solana forward.
Great. Thank you, Cosmo. Absolute masterclass on the DAT space. I just want to quickly plug a blockchain letter that Cosmo had written. It's on the Pantera website. So informative. I learned a lot. I think you all will enjoy it. And to just quickly end on a personal note, what is a quote that you live by?
I always think back, is because I keep a daily trade journal of my thoughts, my mood, just like how I'm thinking about the day and the things we're doing. And at the top of my trade journal, I have a few things that I reread every day, like my mantras. One of the things is always be long-term greedy. It was something that my PM at Hitchwood Capital taught me when I was a really young investor. And the idea being, you shouldn't be optimizing for short-term gains, shouldn't be optimizing for short-term wins. Really always try to be long-term greedy.
Excellent. Thank you, Cosmo. Appreciate it.